Does it seem like it's impossible to get a home loan if you have a bad credit score? Let's face it, these days that is just the truth. Most lenders will not even consider an applicant with a credit score below 620. And depending on some lenders, you may need credit scores above 720 and even 740 to be eligible for a mortgage. If you are serious about investing in real estate, the first thing you need to learn is that there are so many ways to fund a real estate deal. And if you follow the strategies in this video, you'll learn exactly how to invest in real estate with no money and even a bad credit score. Welcome back, landlords. If you love real estate, owning rental properties, and investing, subscribe to the channel and hit the notification bell to watch our videos every day to stay up to date in the world of real estate. Let's look at exactly how real investing with no money and bad credit is possible. But for starters, what is considered bad credit for buying real estate? A person is considered to have bad credit if they have a history of not paying their bills on time or owing too much money over some period of time. Obviously, people with low credit scores find it hard to get a loan or obtain a credit card. As it pertains to real estate purchases, one way around this hurdle is to get a loan from a hard money lender. What is a hard money lender? Hard money lenders may be one of the best available options for real estate investors with low credit scores. Hard money lenders are private groups or individuals who offer short-term loans that are backed up by real estate. Hard money lenders are only interested in investment deals. They do not fund someone who wants to buy a house to live in. The best part is that hard money loans can fund you very quickly, usually within days, and they are easy to find, despite the name hard money. That is the reason so many real estate investors use this source. Unlike traditional money lenders, hard money lenders do not consider credit scores as the basics for lending money. If your credit score is good, that's fine. If it isn't, it doesn't matter, as your application is still more than welcome to do business. Hard money lenders only care about one thing: if the deal is good and if it makes sense. If the numbers work, they will most likely fund the deal, whether you walk in with a 700 credit score or not. If you have a good real estate investment on hand with good profit potential, a hard money lender will fund it. Even with your low credit score and lack of money, if you do not pay them back, they will take ownership of the property. That is why they care a lot about the numbers and value of the real estate you want to invest in. If this option doesn't sound too appealing, you may want to consider getting a partner. There are so many people interested in real estate investing and would use their credit to fund deals, provided they do not have to do all of the other heavy lifting. Why not take up a partnership with someone like that? In return, you'll be able to lock down more funding for your deals. Your partner can be anyone: a friend, relative, neighbor, colleague, or someone you met on social media. Just remember that your partnership has to be with someone who has the resources and skills you lack, and vice versa. In this case, you lack the credit score needed, so partner with someone who has an excellent credit score and can secure the funding for your deals. On your end, you can have the time, deal-making skills, or another resource your partner may not have. Next is to work out a 50-50 partnership so that once the deal closes, you both split the profits. Make sure to consult a business lawyer and do thorough research before getting into a partnership deal. But what if I told you that you could actually get your hands on property without even having to deal with a bank in the first place? This is done through seller financing. Seller financing is another way of real estate investing better utilized for properties that are fully owned and paid off. If a seller does not need quick payment immediately from the sale of their home, then this strategy could be a great option. When the seller finances the deal, they basically become the bank, which means you now have a mortgage with the owner instead of a lender. When the agreements are finalized, the seller allows you to make monthly payments until you eventually pay off the property or till the term of the loan ends. So you see, seller financing deals can be a win-win for everyone. The seller dictates the terms, and many will not ask to see your credit scores or dig into your finances too deeply. Meanwhile, they get a monthly income stream. For instance, a retiree might love the idea of getting a monthly set payment for their home. Likewise, a landlord may want to upload a property without getting out of the market completely. In both cases, a seller financing agreement can satisfy all sides, helping you build capital and credit as well. This leads me to another brilliant investing option, which would be lease options. A lease option is also called a rent-to-own lease. A rent-to-own lease is a great opportunity if you're trying to figure out how to invest in real estate with no money. It's also a wonderful option for property owners who are thinking about selling but are not in a rush to do so. For this strategy, the landlord is interested in selling but not at the moment. The tenant then agrees to pay their rent as well as an extra amount every month, which is then allocated towards a down payment. At the end of the lease, the landlord now has a guaranteed sale, and the tenant can get ownership of the property. This is therefore real estate without the need for a huge sum of money or loan. You also can consider applying for government loans. Many loans, including the USDA loan, FHA loan, or the VA loan, sometimes offer low credit score requirements, low down payments, and the property can also be used as an investment property. While people most of the time use these loans to purchase a single-family home, they can be used to also finance 2 to 4 units, multifamily properties. Keep in mind, however, that you will need to use the property as your primary residence for some time and deal with living next door to your tenants. If government loans aren't your thing, one of my favorite ways of building a rental portfolio would be utilizing the Burrr Strategy. The acronym for the Burrr Strategy is pretty straightforward, and these are the steps to make up this investing plan. Buy. You basically buy distressed properties, ideally at a deep discount and in need of major repairs. Rehab. You then rehab the property. However, you can rehabilitate it to sell it, or with an aim to appeal to renters. But when using the Burrr Strategy, it's usually rehab for rent, which brings us to the next, rent. Once you have completed the renovation, you need to market the property for rent and secure quality tenants. You can certainly hire a property manager to do this, as it saves you a ton of headaches, but it also costs money. It is recommended that investors manage at least one of their own properties. This provides you a solid understanding of the leasing and property management process, and you will be better positioned to hire and supervise property management companies down the line. Refinance. Once you have rehabilitated the property and signed a tenant lease, you can refinance the property. Typically, Burrr investing requires using hard money loans to finance a property purchase and rehab. However, these loans have high interest rates as they are designed for short-term investment use. Once your property meets traditional mortgage quality standards and is rented out, you will want to refinance into a traditional mortgage. This new loan will then pay off the outstanding hard money loan, so your property won't be taken over by hard money lenders. As these steps illustrate, Burrr investing requires experience, knowledge, and a good understanding of property management. The success of the strategy is actually on refinancing, so that is the most crucial knowledge needed. One of the best things about real estate investing is that it is open to everyone. You do not need to have millions in the bank or a good credit score to be a part of it. You do need passion, perseverance, and desire, and if you can package that, you're on your way to financial success. So get creative, make connections, and focus on finding the funding to close those real estate investment deals without good credit. If you found this helpful, please give this video a thumbs up for the YouTube algorithm so it can spread to more people. Now obviously, if you're a first-time homebuyer, you want to look for ways to buy a property with little to no down payment to begin with. I have the perfect video that will explain exactly how, so click the video on the screen now and I'll see you in the next one.